Namaste, welcome to Arthaniti. George Soros has become a talk of the town in India, all thanks to a 2-minute reference to India which he gave in his speech at the Munich Security Conference. Now, his statements have triggered responses not only from ministers in the central government but hours and hours of prime time news, WhatsApp messages, other social media platforms. He is everywhere. Now, without getting into the politics of whether his remarks will have repercussions on the political environment in India, I am going to focus on that part of his life where he came to be known as the person who broke the mighty Bank of England. Now, this video will be divided into two parts. The first part is where I give you a brief about, a profile about who George Soros is. And in the second part, I will tell you that story where he came to be known as the person who broke Bank of England. Now let us start with the first part. Who is George Soros? Well, he is a nonagenarian, yes, a 92-year-old Hungarian of Jewish descent. He had to run away to England with his family in 1947 to survive from the Nazi occupation of Hungary. There he acquired doctoral degree from the London School of Economics. After finishing his education, he started working as a trader with a merchant bank in London. The name of the bank was Singer and Friedlander. In 1956, he migrated to the US. There he started working as an arbitrage trader with a merchant bank called FM Mayer. He became quite popular in the trading circle. He quit his job in 1969 and he started his first hedge fund, which went by the name Double Eagle. Now, what is a hedge fund? Well, hedge fund is a limited partnership of private investors wherein they pool in their money, which is then managed by professional fund managers. The aim of these managers is to pursue extraordinary returns. Well, these kinds of investments are a very risky proposition. Now, these fund managers do not utilize the assets which are under their management, but on the basis of borrowed capital, they take highly risky speculative bets against any kind of securities, be it stocks or currencies, so on and so forth. The aim is to earn extraordinary returns. Now, do we have hedge funds in India? Yes, we do have hedge funds in India. BlackRock, Tiger Global, AQR Capital are some of the very well-known hedge funds in the country. Hedge funds, like normal mutual funds, are not monitored by SEBI. They do not have to give or declare their NAVs daily like normal mutual funds do. Correct? Because of the high percentage of risk involved in such investments, they also have a tendency to earn above average returns. Right? So these are hedge funds. So George Soros started a hedge fund by the name Double Eagle. In 4 years' time, having earned some profit from this venture, he started Soros Management Fund in 1973. He renamed Double Eagle as Quantum Fund. Now, he had partnered with a person called Jim Rogers. Quantum Hedge Fund was consistently giving high returns for almost 3 decades. From 1970 till 2000, it gave returns as high as 30% per year. So imagine if you would have invested around $1,000 in 1970, you would be sitting on a hefty valuation of nearly $4 million by the end of 2000. So this was the kind of returns that his hedge fund generated. Now let us focus on the second part of the video where George Soros came to be known as the person who broke the Bank of England. A little backstory. Well, European Union was formed in 1993. It consisted of 12 European countries as its initial members. Now, in a run up to this formation, these members had put in place ERM, an exchange rate mechanism. Now, what was this mechanism? It was basically that the member countries would maintain their currency rates within a designated price band in relation to other currencies in the group, in the club, right? Now, to maintain this currency valuations vis-a-vis other currencies in the club, countries which had most valued currencies had to sell their currencies and buy the weaker ones. Yeah, but because of this, what would happen is there would be all the currencies would be in the designated price band, right? The aim of doing this was to bring in economic and price stability in these member countries before they unified to become a common singular economic zone and a marketplace, right? So that was the idea of putting ERM in place. Now, UK became part of ERM in 1990. Now, after it became a part of ERM, it had struggled all through to maintain its currency within the designated price band. Now, in September 1992, the German mark, the currency in Germany was called as mark. The German mark was the most valued currency in the ERM, while the British pound was the least valued currency. Ideally, the Bundesbank, the central bank of Germany, had to sell their mark and buy the British pound to stop it from further devaluing. But that did not happen. The head of the Bundesbank was of the opinion that the British pound had to devalue further. Now, George Soros, who was a hedge fund manager, basically a speculative investor, saw this opportunity in the market and started selling pounds. Yes, he did not own any pounds. He borrowed government gilts and started selling them in the market. His idea was to sell the securities in the market and buy them back after they had fell enough at a cheaper rate and earn the margin. That was his idea. Now, he knew that Britain did not have enough foreign currency reserves to sell so that they could keep their pounds from further devaluation. Now, when he was selling pounds in the market, he was selling the securities in the market, the price of those securities started reducing because of heavy supply in the market. Now, to keep the currency from being devalued, the Bank of England, which is the central bank in England, started purchasing pounds in the market. Yes, by mid-morning, they started purchasing nearly 2 billion pounds per hour in the market. But that did not stop the barrage. Speculators led by George Soros knew that this had to stop, and there was a limit up to which the Bank of England could buy these pounds and maintain the valuation of their currency. With Germany not chipping in to help, with limited resources that the Bank of England had, they also tried raising the interest rates. The interest rate was 10, which they raised to 12 with the hope of attracting more and more buyers in the market, but that also did not help. The British Prime Minister John Major suggested that they increase the rate further to 15, but to no avail. Yes, George Soros had made a kill without owning any of the securities. He had short positions of nearly $10 billion that day in the English market. In that one single day, on 16th of September 1992, he made a profit of $1 billion in one single day. By the end of the day, it so became that Britain had to pull out of the ERM because of heavy devaluation in the British pound. So that was the day when Bank of England got nearly broke. It devalued the currency to such a level that Bank of England could not do anything to stop the devaluation from happening. So this is the story of why he came to be known as the person who broke the mighty Bank of England. He does not stop here, right? His what do we say, involvement in the Asian crisis in 97-98, yeah, wherein which led to the downfall of government in Indonesia, currency devaluations in Malaysia, Japan, China, yes, or Russia, like far-reaching impact of the Asian crisis. George Soros also was one of the main reasons that this crisis happened, and how he gained from that crisis. Keep waiting for that video. I will be posting it next week. So, this was about George Soros and his interesting story from his life, which made him to be known as one of the greatest investors of all time, right? I hope you have enjoyed my video. Please subscribe to my channel for more such interesting videos. I normally post videos about investments and what investors should do, like you and me collectively, so that we better our returns, right? So keep watching this space, and subscribe to my channel once again. Stay safe. Have a happy weekend. Goodbye.